This is your Wall Street wake-up call. The Bank of England keeping benchmark interest rates unchanged at 0.5%. For more analysis, I'm joined now on set by Stuart Warther, a U.S. equity and derivative strategist at BNP Paribas. So, Stuart, the markets were pricing in a rate cut, especially after that Brexit shock last month. Were you surprised by the decision?
We were. So actually, at BNP, we had a forecast that they would cut 25 basis points at the meeting today. And I think a couple things are at play here. One of which is the positive response from assets around the world to the vote, and generally kind of strong central bank support implied, and quick political uncertainty being resolved, especially with Theresa May being brought in as the new prime minister. So there are a lot of things that are at work, including better data in the U.S., kind of a optimism in markets about global growth. Mm-hmm. So I just don't think that, given the lack of data between now and the referendum itself, that the BOE wanted to move.
And most BOE members said they expect a loosening of policy at the BOE's next meeting in just 3 weeks in August. But will we really have more info by then to really know if this Brexit shock really is a threat to UK growth?
I think we will, and especially with some of the monthly figures, some of the survey data that we'll get between now and then. Particularly one of the things that I think is interesting is that expectations did settle on this July meeting, whereas kind of earlier, right after the event itself, a lot of economists were actually calling for something by August. And as the initial shock was rather severe, that expectation kind of built around July. So I think at the end of the day, the expectation is for looser policy and potential some fiscal stimulus, and also maybe even some additional asset purchases by the BOE. But when exactly that will be, August is still on the table. But then anything before year end.
And whether it's in August or year-end, borrowing costs are still pretty low there, so the impact should be minimal. Let's also talk and shift gears and talk about the markets. Stocks are at record highs, bond yields near record lows. Help us make sense of this dynamic.
I really think one of the reasons why stocks are so high is because bond yields are so low. So if you look at just the discount, think about the yields as a discount rate on future dividend payments that you receive from equities. And if you think about that framework, then that discounted cash flow that you're getting actually has a higher present value now. So just from that alone, all else equal, equity prices should be higher. And I think the recovery in equity sentiment overall, the notion that potentially central banks are being very proactive at the same time that the actual tangible detriments of this UK vote are kind of elusive, that combination makes markets go higher.
Now, we're at about 2150 in the S&P 500. Have you changed your price target for the index because of this, shall we call it a post-Brexit rally?
So we actually have not. We reissued a target of 2150. That was our original target from December of last year. And I think we're really on pace to be exactly where we want to be. Part of the reason why markets rallied so much was because of this de-risking. Now that this event is over. Another reason is because yields reacted so strongly and that discount rate is lower. And then, kind of as we get to the back half of the year, we expect the U.S. economy to slow down. So Q2 data is actually very strong. We'll get probably a good Q2 GDP print, around 2.5% on July 29th. We'll also maybe see the ECI picking up. And all of that is probably going to lead to the Fed to being a little more hawkish. So we're in this almost lull between good data and a dovish Fed. And we haven't really had an opportunity for at least the Fed to inflect and kind of tame markets as far as bringing up those expectations of a hike.
All right, and we'll hear from the Fed in just a few weeks. Stuart Warther from BNP Paribas, thank you so much for coming back.
Thanks.
I'm Scott Gamm, and you're watching The Street.